Today we will talk about macroeconomists, doomsayers, people that try to predict the market, to time the market, and I will show you the proof why it's a waste of your time. And we will do so by reviewing one another video. We will react to this video. Okay, so this is Value X at Berkshire Hathaway 2025. So this was a meeting organized by Guy Spear that you can see here during the week of Omaha Berkshire Hathaway annual meeting to see Warren Buffett. So you have side events. This is one of them. And you have one speaker, Chris Davis here, that will mention some specific stats about macroeconomists, people that try to guess where the market is going to be. So it will be a short video, but full of value because you will have the proof of the past. Basically, you will have a track record of estimates. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year without guessing where the market will be in the future. So I think this is big enough and we can start. I will put this at the goods. Okay, perfect. And it's starting at 14 minutes, 10 seconds. Okay, normally, let me put the subtitles here and we can start. Normally, you should hear good.
When you do decide to be in the investment game, that create your return are this combination of the results and then the behavior, right? So a business will generate a certain return, but your behavior and when you purchase or when you decide to sell that business will be an equal determinant. You can quantify it. This simply looks at dollar-weighted returns of funds versus time-weighted returns. So you can see about 170 basis points per year of behavior penalty.
Right? Yeah, basically, if you had invested in the S&P 500 a couple of years ago and did not touch your account, you would have outperformed the kind of people that try to guess the market. There was a study made with the dead people and their Schwab account and their Vanguard account. And the more passive you are with your portfolio, the better the performance for most people. Because it's when you have emotions, you try to time the market, that you make stupid mistakes. So the point that he will make on this video is emotions will completely hurt your performance. Emotions can negatively impact returns if you do it the wrong way. Most people are not fit for investing. But if you watch this niche YouTube channel, first, thank you. And you are part of the minority that wants to take action and invest for yourself, beat the market, etc. But I'm telling you, not the majority of people are like this. People, you can talk about it with your friends, your family members. They try to guess where the markets will go. And most of the time, that's a waste of time.
Broken out, but that's just simply a fund has great results for 5 or 6 years and people pile in and then it has crappy results and people get out. You know, the 10-year returns may be fine, but the return that the actual investors got was much lower because of the investor behavior.
By the way, you have not clicked on this video for this, but since you are here, let me give you another nugget of wisdom. This guy is Chris Davis, but his family he is full of investors, and there is a great book about his grandfather, Shelby Davis. So this is the book called The Davis Family, The Davis Dynasty, and the results are spectacular. And Shelby Davis, the grandpa, did exactly what we do now on this YouTube channel. Turn as many rocks as possible and hold for a long period of time great businesses. So in case you wanted a book that nobody's talking about on YouTube, here we go. Find, look for on Amazon the Shelby Dynasty or something like this.
So I thought I'd just give a quick sort of defense against the dark arts of things that are just a couple of things that I think really influence those behaviors. And I think one of them is really thinking about forecasts. A lot of time will be spent the next 2 days with people giving market forecasts and recession forecasts. And this was the market forecast for 2024. I named names. I actually put the strategists The green bar is what happened, and the blue bars were all of the forecasts of all of the top strategists on Wall Street. And it's amazing that those strategists have a real impact on behavior, right? If you're forecasting 4,200, your clients behave in a certain way, and if you're forecasting 5,200, they behave in a different way, and there was no predictive value. There'll be a lot of talk about interest rates and the Fed and what's going to happen. Bill Miller and I started this almost 25 years ago. The Wall Street Journal puts a 6-month forecast for interest rates, the top strategists on Wall Street, survey of economists, and it had zero predictive value, right? Which is sort of amazing. The idea that those forecasts influence behavior with absolutely no predictive value. Okay, this is where I really get dirty.
By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. This stat is amazing. If you are watching this video right now and you are going to Twitter or you read the Wall Street Journal and you think that these experts have a clue, the truth is the estimates they will give you most of the time, they are wrong. And it is crazy because this is just a complete waste of your time to listen to economists. You turn on CNBC television and you want a short-term forecast. In the short term, nobody knows what to expect. So this is the 6 months average forecasted direction for interest rates. And this is a Wall Street Journal survey of economists between the 80s and now. And basically, the forecast was wrong 60% of the time, which is huge.
Oh, predictive value. Okay, this is where I really get dirty. This is because I have hedge fund envy. Some of you may manage hedge funds. You should know as a fair warning that I'm deeply jealous of your fees. But I do think it's by and large a racket. I think you're more paid for volatility. If I own a stock and it goes up 15% a year for 4 years and then falls in half, my clients have broken even and your clients have lost 25 or 30% because they paid you that 20% each year on the way up. So I don't love that alignment. But this is a really interesting real-world study. This just looks at the total hedge fund index over this is a 10-year period. And you can see the dramatic underperformance. But what's really dramatic is the beige bar in the middle are just hedge funds whose business model is to make investments based on macroeconomic predictions. And so that is sort of an amazing real world case. Well, of course, that raises the wonderful question that I put to Charlie years ago when Dorothy, as always, arranged a dinner or time for us to get together. And I said, Charlie, I'm a believer in capitalism. I'm a believer in free markets. How the hell can it be the case that a free market system, which is supposed to promote efficiency, could allow all of these strategists and economists and hedge fund people to make a living? And of course, he told the iconic story of the fishing tackle shop in Minnesota, where he went to buy a lure and there was this new pink and green one. And he said, my God, do fish take this? And the guy said, mister, I don't sell to fish. Right? So when you think about the Weather Channel is not in the business of predicting the weather, right? That's not their business. Their business is selling ads. To sell ads, they need engagement. To have engagement, the best way to get engagement is fear, right? So you can't just have a snowstorm. You have snowpocalypse, and you have a storm of the century 2 or 3 times a year. You have these new phrases, heat dome, polar vortex. Well, that's because they're not predicting the weather. They're selling ads. And of course, those economists are giving predictions because they're asked, not because they know.
Yes, exactly. And in the world of finance, stock market in general, you will have a lot of economists that will use complex terms, complex wording to feel very smart. And if you have watched the movie The Big Short, they talk about this. They talk about the derivative stuff, the CBO, CBS, subprime mortgages, etc. And they said in the movie that the goal is to make you stupid if you are a client and you don't understand anything. This is very true on social media too. You don't need to go back to 2008. You have just to open CNBC television, right? And they will use complex words with nice suits. But at the end of the day, is your track record good? If for the past 10 years your track record was bad every time, maybe the solution is to stop listening this person. So the same thing is true. I wanted to make this video for a bit of caution for you guys. Now you have a uncertain environment for 2025, tariffs, etc., macro stuff. You have a president that will change his mind every week. So this is very uncertain, and you have the macro situation that is uncertain and that will always be uncertain because if you go on Twitter right now, they will tell you that now it's more uncertain than the other years prior. Can you name 1 year where everybody was obvious and it was a piece of cake? It's very rare to have this year. So every year will be uncertain. This is why we do this stuff. And if you are serious, as always, you can take advantage of this volatility and make a lot of money. And this is exactly what we do and what we do with our clients. So obviously you will have complex words, but at the end of the day, how to invest in the stock market is very simple. You invest in great businesses at a great price and you hold for the long term. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.